Okay, welcome everybody to another episode of Environmental Social Justice. Today we have Mr. Grant Harrison. Grant is with the company called GreenBiz and is an ESG analyst and green finance expert. So welcome to the show, Grant. Thank you so much for joining us.
Thank you, Wendy and team. Thanks for having me.
And we won't hold against you that you're in San Francisco and, you know, the whole Dodgers Giants thing.
Oh,
I appreciate the forgiveness. I grew up as a surfer and I know about this much about any sport with a ball, but I do know that we're playing each other right now. So go Giants or not, I don't know.
You don't know. And yeah, it is true.
Exactly.
I talk quite a bit about open water swimming and surfing. So you are in love with the environment, in love with the ocean. So it makes sense that you are with GreenBiz. Could you tell us real quick what GreenBiz is, what that company does?
Yes, GreenBiz Group is a media and events company focused on primarily the corporate sustainability profession. We also run an executive network for chief sustainability officers and their team. It's about, I think, 105 companies at this point. I might have that exact number wrong. So the original remit is the corporate sustainability lead. That has grown into other territories like green finance and ESG as various markets of the sustainability realm take hold, transportation, carbon sequestration, all those, not just the corporate sustainability exec, but that is kind of our bread and butter group. And I am our first dedicated analyst on the subject of green finance and ESG. So excited to see.
Now, anyone who's actually watched the show knows that I am a big fan of ESG. I love the fact that companies are now paying attention to it. Easy, Joel.
Let's back up for a second. Let's define ESG.
Let's
not just start with the acronyms. Let's actually define it, if that's
okay. Go ahead.
Definitions are good. Yes, ESG, 3 words: environmental, social, and governance. Essentially a way of categorizing the performance of companies based on those 3 factors. So environment, we all know what that is: use of energy, pollution, greenhouse gas emissions, the rest. Social, board representation of women and minorities, supports LGBTQ rights within their company, pays fair wages, all the rest. And governance, how the board makes decisions about capital allocation, the board's composition itself, and all the rest. So ways of assessing value that are not numbers, just about profit and loss.
Thank you.
And thank you, Joel. I did jump ahead. I did do that.
I'm like, we gotta know the acronyms before we get into it. We just gotta know.
My cardinal rule is no acronyms. And what did I do? Acronyms.
So Grant, I'm curious, in light of everything that has been going on immediately, like in the last 2 months with floods, wildfires, hurricanes, how are you seeing more companies jump on the bandwagon to, get with ESG?
I think, going back to definitions, just because I think those are helpful, I think the terms sustainability and ESG have kind of become conflated into one concept. So when I think about ESG and green finance, I'm kind of looking through the nerdy technical lens around how value is measured through these ESG factors in investment decisions. I think the general public is coming to realize, thankfully, that we do live on a planet. It is inundated with carbon, methane, and other gases that you're all very familiar with. And you can't really lie to yourself to any degree. We lie to ourselves for whatever purposes to make it through life in some ways. But the immediate impacts are in everybody's front yard and backyard, or at least your neighbor's house. Or, it's like this has finally made its way to everybody's personal life. So that said, where companies care, ethically, of course, that's fantastic. But also 80% of the S&P 500 is intangible assets. A lot of that is reputation and license to operate with the public. So if you're not at least starting the conversation, hopefully substantively, but at least, dipping a toe into trying to become sustainable or assessing where you're maybe not in terms of your core business model isn't really acceptable at this point. So the answer, that's a very long way of saying yes. I'm seeing most, and from sectors that have been relatively quiet or are the hard to abate sectors, those are coming in full force. So it's a promising, troubling year and a half that we've lived, but it's also promising if you have an optimistic bone in your body.
So since ESG, or environmental social governance, or even monitoring and rating these things is becoming commonplace, one thing we've seen is what I have been calling unintentional greenwashing, which I believe is actually called greenwashing, or saying that you are going to do something when you really don't have a plan to get that done. So what are you seeing in the marketplace in the past 2 years? And let's just even go out 2 years from where we were then to now.
Yeah, I think the public's acumen and ability to identify greenwash has really improved in the last 2 years. Maybe not everyone was thinking through that lens until, like Joy was talking about, the immediate climate impacts from floods and fires and hurricanes and all the rest. So I think people's greenwash meter has gotten really well tuned. Greenwash being kind of like the intentional disinformation disseminated by a company as to its environmental responsibility, like this bottle cap's reduction of plastic by 20% has this magnificent outcome, when come to find out, like, I don't know if those two actually tied together. Whereas the greenwashing side, which I personally think is much more forgivable and entirely forgivable, is kind of when companies or investors cynically promote, or not cynically promoting, but have an earnest hope that the voluntary sustainability efforts that they are performing are actually closer to achieving the change that they really do. So we are in a space where most of this effort is voluntary. So that's the only way it's going to happen at the moment. Some of them are close to the mark. Some of them are 20% there, but it's not the same cynicism as the overt disinformation of greenwashing. But yeah.
So what sectors do you actually see as kind of like leading the actual greenwashing and actually have the best intentions behind it, but may not be actually able to get it?
I think, and yeah, just to be clear on my role, I'm not actually like a financial analyst in the sense of doing fundamental analysis on companies and their performance, but I'm talking to those people that do that, so I'm kind of a proxy for them. But I would say tech just inevitably has a leg up for a number of reasons, and I do give them credit for this, but their operations are relatively simple. That's a broad statement, but to decarbonize, their inputs are not as complicated as like maritime shipping or steel production or heavy industry.
Yep.
So it's easier to get the wins on renewable energy. All of us have a touch point with all of the major tech brands, where it's the branding element and the value as it's created by our perception of the company is quite strong. I don't think we could all name your top 10 steel smelters in North America. If you can, that's actually quite impressive. Yeah. But so yeah, I'd give tech a leg up. I think the financial services industry itself, not just looking at its own operational emissions, because in truth, if your favorite large asset manager went completely offline tomorrow and every power line dropped and they stopped flying and all the rest, it wouldn't really make a massive impact. It's what is in their portfolios that matters. Yeah. And I know there's no acronyms, so I won't go into all the acronyms, but there's plenty of groups organized in the last year with the words net zeros in them, carbons, partnerships, all aimed at actually looking into how do we decarbonize our portfolio, not just our company travel and buildings and all the rest. So that's probably the biggest rippling impact that one could have in a capitalist system, which is getting deep into the capital markets and actually shifting the flows of capital towards something good and away from things that are bad. I don't like good-bad binaries that much, but I don't have a better way of saying it. So yeah, I'd say tech and financial services for now.
One thing I wanted to just real quick explain to general public when we talk about greenwashing let's talk about a product. So there's a cosmetic company that shall remain unnamed, and they had a big ad campaign where they were going to do their face cream in a tin can because it's fully recyclable, better for the environment, et cetera. And people were jumping all over. Great, thank you, wonderful, this is amazing. And then in the comments, they said, well, as supplies last, we'll be going back to our original plastic labeling. So it's like, bah, why do that? Why do that? And then there's another one that was advertising their spray cleaning bottle in a recycled paper canister, and someone took an X-Acto blade and cut it open. It's a plastic bottle that was just wrapped in paper. So it's not really solving the problem. So just for the general public to understand, that's kind of like it's faking it. There's no plan, they're pretending. And people are coming down on that and realizing the intention may be there, but it has to be executed. And what I love about what the financial industry is doing and people like Grant is they are finding those solutions, they're promoting those solutions, and they're making it happen. So thank you for doing that. Thank you for bringing this forward. What are your primary criticisms of ESG?
That is a question, huh? Well, I will say, just going back, I just keep on the greenwash thing, but I will answer that question. I think it's worth noting too, like, and you're using the cosmetic company as an example. I like that example because it's quite different from, at least in my vantage point, financial services, because all of us have, well, that's maybe too bold of a claim, but most of us have interacted with plastic bottles, maybe some cosmetics like consumer goods. We understand that when X, Y, or Z company claims we use 20% less of this stuff, you've interacted with that stuff a fair amount, so you can kind of understand what they're claiming, even if it's disingenuous. In financial services, and this has actually changed a lot going back to this last year and a half, the number of active retail investors who are millennial, Gen Z, the rest, Robinhood, what that opened up to day trading or just buying into indexes and ETFs, the pre-existing understanding of what is true or not true in that space for your average retail investor wasn't as up to snuff as like knowing when X, Y, or Z bottling company says less plastic. So there's been more space for greenwash because they can say this is this or that fund and here's what it does. And if you're new to investing, how are you supposed to know to go do the fundamental analysis on whether that's true or not? What sources do you even look to? So I don't think that the majority are being disingenuous and greenwashing, but there are those that have done so, and there are those that are beginning.
Well, that's why I call it unintentional. I mean, I don't think people really go out. You know, there are some people that will just lie. We get that, but for most people, they are trying. They just don't have the knowledge. That's all it is.
Yeah.
It's kind of funny because it's like you mentioned the bottle thing. If anybody who watches Last Week Tonight, which I love that show, he actually did a segment on the whole plastic bottle debacle and how it is kind of like, oh, just reuse them, we recycle them, but then it's actually broken down to be like, no, you can actually recycle them only one time, and then it's just, you know, and it's kind of like, so it's actually a really educational thing that's hysterical at the same time.
Yeah.
But so I think that's kind of what you're talking about. It's like the intentions are good there, but the limitations on those intentions may not be. That's not what's being explained to people.
Yeah. Absolutely.
It's terrifying.
And I'm taking notes to go back and watch that episode.
It's really good. It's hysterical.
Right.
And I think that a lot of people right now, with everything that we're going through with trying to come out of the pandemic and food supply, food shortages, you know, backups at the port, you know, people kind of really think of it as just, I'm just trying to survive. Anything that I can, any bottle that I can get, any sort of packaging I can get, you know, I'll take it, you know, based on, you know, kind of everything that's going on in the world. And I know a famous retailer that delivers water. They're having a lot of problem with like mold and algae growing in the bottles because I don't know if it's that the bottles have been recycled, you know, too many times, but, you know, getting a bottle and actually seeing, you know, something develop on the bottle like an algae or a mold.
It's a handicap.
Exactly. That couldn't be too healthy when you're looking into a clear, you know, plastic bottle. I think anybody would agree that that's not good to ingest.
No.
And I think the just like my general lens on this and my role is primarily thinking about like the intersection or the conversation between institutional investors and large corporate issues. So I'm not as much thinking about the individual retail investor and what a person can do to affect change, but like you're talking about with stoppages at the port and supply chain insanity and companies that are some who are actively helping to resolve issues like that, some who are perpetuating them. For the average person / consumer who seems like the majority at this point, I don't have any data to say that, but most people are aware that the planet is cooking. And like, if you're a person who thinks of yourself as a good person, which a lot of us do, you probably want to do something about that if you can. It doesn't always feel super empowering to be able to buy a slightly different sized or shaped thing, even though I do think that a lot of those are helpful, and not calling those greenwash or greenwish, but they're just so incremental that it doesn't feel super substantive. The cool thing about what ESG investing, not just ESG as a concept, but the actual investment process using that analysis is that the money that is growing while you wake and while you sleep can actually have a fundamental like undergirding change to the system, not just like, okay, I got a slightly different shape or size of this consumer good, or I use less of this. I try to do all this stuff. I have my climate sins for sure. It's not like I take 30-second showers and I rinse my wetsuit every day. I use a bucket of fresh water to rinse my salty wetsuit. So there's only so much you can do individually, but that the ESG investing world opens up a whole other
and
level.
every little bit helps. I mean, that's one of the things we talk about is you just do little changes, it'll snowball. One of the things you and I talked about, just to bring back to the finance side, you and I discussed very, very briefly, Deutsche Bank is looking into ESG claims. Mm-hmm. What have you learned from that? That's very interesting.
I think, so the former head of sustainability for DWS, which is the asset management business of Deutsche Bank. And there's been a couple very headliney conversations in the sustainable finance and ESG world. One has been what's happening at DWS. The other is a gentleman called Tariq Fancy, who used to run sustainable investing at BlackRock, and he's had a lot of very interesting, genuinely interesting things to say about the space that is worth sharing with you guys after. But kind of centered on the same theme with GWS. It was this woman who's running sustainability was raising her hand in some capacity, saying, I think that we're misrepresenting our actual capabilities around what we're claiming to do in ESG, and this is going to bite us in the rear end. She was eventually let go from that process, and it now is biting GWS pretty hard in the rear end. The SEC is investigating them. Got their own investigation going on in Europe. It's essentially a signal to the rest of the market, where we're still kind of waiting to see what regulations come on the horizon for 2022, that the tolerance for greenwash is low to gone. So I think that this last year has been fantastic. There's at some point $1 in $3 in the world, and don't quote me on that, something close to that was in a fund purportedly managed per ESG strategies or ESG criteria or screening or something involving ESG. That's a ton of money, and that's a great sign. Definitely not every one in those $3 is like perfectly aligned with what it claims to be. DWS is an example. Don't think it's the majority again, but I don't think that will be the only firm that experiences this kind of misrepresentation of their capability and having a consequence befall them. So,
wow,
yeah,
I had no idea. That's intense. Now, let's talk about the ESG role. There are now quite a few roles popping up for, head of sustainability, chief sustainability, head of ESG. What are these roles? What kind of qualifications do these people need? What are they doing?
Yeah, so the number of people in the last year and a half too, and there's data to support this via LinkedIn, which I had at top of mind, two really interesting stats for those with circular in their title and those with ESG in their title, and the rate of growth of both those, and in some ways the lack of clarity of what those people actually do. So part of my job as ESG analyst and our first analyst is figuring out what are these people's remits and what are their goals and what are their challenges. It seems like I'm admittedly not certain, so I'm kind of speculating here, but it seems like the two categories that are not winning out on the ESG talent boom, are those who just finished like a sustainability degree or something that purportedly teaches them the sustainability profession. I have one of those master's degrees. I don't know how useful that was, but I did it. It was kind of a glorified book club, but it was a great time, and I have a degree from it. So those folks maybe don't have enough commercial experience to be valuable right away, even though they've taken all the courses and have relevant coursework and knowledge. The other folks who are maybe did something that was related to ESG or sustainable finance or something that ties into that, but it was never called that, and they did it for 30 years and now they're onto something else. Like, that's also a group that I don't see benefiting from this war for ESG talent the most. So it seems like the sweet spot is a couple years of commercial experience, probably still open enough to be enmeshed into the long-term ESG strategy of a company and the culture and all the rest, but also has those degrees that, whatever we want to call them, ESG and sustainability and green finance and all the rest. And I think the first group that has been hired in this round is the horde of primarily young professionals who mine and crunch numbers and other information about companies' ESG commitments and practices and performance. So I think there's more technical skill sets required than I expected when I started this role, understandings of using machine learning and AI to crunch data from every possible source you can get, not just when companies respond to the various, I won't use the acronyms, survey askers who request information or assess information based on sustainability reports. So again, a long way to say I'm still making sense of it. And I think some of the people I ask have a very clear sense. Some of the people I ask have a very clear sense, and then at the end of their last breath of the sentence are like, actually, I'm not sure if all that is true, but check in with me in 3 months and I'll tell you what I'm doing. So,
well, it's evolving. I mean, the whole role is evolving. I personally think one person isn't going to have every qualification you want. And it may make sense to have a team of 3 to 5 people. Everyone brings something to the table where, if your company can support 3 to 5 people, they will all bring their knowledge together and create a complete package. I mean, that's just my personal insight. And I think that's with any role at all. So let's just look at the future. Where do you see this developing? Do you see ESG maybe, because right now it's peaking. I mean, it's just out there.
Well, I think, so answer to your previous question and to your question here, I think that the folks who have been at the helm of ESG programs or positions for whatever number of years before this last year or two's explosion, 7 years ago, let's say, they had 2 minutes with the CEO during the investor call. They were a nice to have add-on. All the rest, they went from being that kind of role, still banging the drum, doing everything they can to get the word out about what their role could possibly do to mitigate risk, create opportunity, also help mitigate climate change on the side. They find themselves now just like rushed to the front of the line and kind of spotlight beaming right back on them. And those folks who are helping build the team, I think, also are kind of figuring out as they go what skill sets they need to support them. Before it was them and one other person. It's crazy how small some of these sustainability teams are, what they can achieve.
Oh, I know.
But as they're hiring, I think they're figuring out like, oh, I got now approval to hire a team of 15. I don't even know what 15 people I exactly need to support my new mission. So I'll keep you posted on how that unfolds. But in terms of the horizon, I have excitement and I have concern, and I have a lot of other feelings. But with the excitement, I don't manage anyone else's money myself, so maybe other people in the industry wouldn't be personally as excited about this. But I think the ESG space boomed a year or two ago. Then naturally, boom goes one direction, pushback comes back and says, actually, no, all you're saying here is not true. The greenwashing, the greenwashing. Regulators see, okay, there's tons of money moving into space. We need to jump in and make sense of this, which is its own interesting conversation within the SEC, very different ideological opinions of what should be material in terms of ESG information. And I think, the regulation move is imminent, and I think it will make the ESG space just better. I think that a space with clearly defined boundaries and rules is a really ripe space to have competition in the way that it should unfold to produce the best outcome. Without those rules, $1 and $3 in ESG funds and the rest, that's great, but it doesn't actually have a clear outcome because there's no clear path that's set. So if I was
paving the road as we go.
Yes, exactly. And hopefully we're paving it with sustainable materials. But so there's that excitement, and then there's natural concern of is the pushback or the backlash too intense to the point that it's criticized into nothing. We like to criticize stuff. It's harder to support things than tear them down sometimes. So got a lot of feelings about it and a lot to learn as I go.
Oh yeah, it's a learning curve. Joel, I feel like you want to ask something. I can see it on your face.
No, I think I'm just more concerned about. So, I mean, there's a lot to unpack there. I mean, if you kind of go back to what Joy was saying, like when it comes to like the food shortages, and you've got the companies that are kind of doing this whole ESG, and they may not necessarily realize there's kind of this whole circular item here because we waste a lot of food. So you have the food shortage from that, but then you've got the corporations that are saying, oh, we can't keep up with demand, but yet you're selling bigger and bigger and more products that we actually need. So it's kind of like we're being pushed to buy bigger and more and more and more. But then it creates this dearth in the economy, or lack, that's probably not the right word, but this hole where we've got to figure out this other thing. There's just this whole cyclical thing there, which I feel like we're slowly beginning to break away on. But if we don't get the actual corporate responsibility that we need to really drive this, that's going to be that's the kicker right there, is that it does come down to the money. It always boils down to money.
Always money.
But I think that's where I'm hoping that the consumer is starting to kind of educate the corporations to just say, okay, let's change this up.
Yep.
So first of all, dearth is one of my favorite words. It's such a funky sounding word. It so represents what it's trying to say. Dearth, just nothing there. So thank you for that. Also, in terms of like consumer advocacy and ability as a citizen / consumer to affect change. Yeah. I don't know if you guys mind flipping a question back on you, but this is something that was really fascinating at the conference that I'm the conference chair for, called GreenFin, that we put on with S&P Global. And we had a roundtable session at this event in April. And this is with people who run sustainable investing strategy at big banks and asset managers and all the rest. And it was a discussion around like, okay, we're all called ESG professionals. We all focus on this green finance space. How do we actually invest our own money? So it's like talking to people about their personal financial decisions behind their professional title. What 401k options does your company have? How do you choose funds in your own brokerage account? Do you think that passive versus active strategies are one's more sustainable than the other, all the rest. And it was interesting. People were very candid, and a lot of people were pretty straightforward about like those two don't always overlap, like their professional development of ESG funds and products and the rest, and actual participation in the market. So for you guys, do any of you, like when you look at your 401k options, if that's part of your professional life or your IRA or whatever it is, like what criteria would you use as, I wouldn't call you lay people because you're out here having a webcast about environmental social justice, but you're a retail investor. Like what do you look at in terms of opportunities to participate?
Joel?
So for me personally, my investments have been steering towards companies that I believe are actually doing huge things in the future. And so for me, it's about getting in, or that sounds so wrong to say, but investing in them now because I believe in what the long-term product can be. So it actually was about researching that. Because also it's just too expensive to invest. I mean, we're just going to talk about this from a layman's point of view. To try to buy in stocks, it's just like, first of all, we're not taught how to do this. That's don't even get me on that subject. As I tell everybody, we're taught how to write a check, but not how to actually invest our money. So that's a whole set of issues right there. So for me, it was about really investing in companies that I see for long-term growth and that I believe that are going to actually do something positive. So that's kind of where my investment goes to.
Grant, you bring up such an interesting question, and it kind of comes down to the fundamentals of the honesty that I need to have with myself, right? Or anybody else investing in the stock market right now. I'm looking for the best return. Yeah. So whatever my wealth manager tells me, or puts me in, I haven't been asking those questions, but yet at the same time, I want to complain about, too many bottles being used or too much, packaging. It creates a vicious cycle, even for those of us who, Joel and I and Wendy, who do have other investments or do worry about our retirements or, get a pension. We're not out there opening our mouths to, the powers that be about the type of things that we want them to invest in. So it becomes a cycle.
Well, it's also volatile right now. So investing in green companies, there's a lot of new startups. There's a lot of change going on. So I'm in Joy's same boat. We have a financial advisor. And the past 2 years, he and I have had numerous conversations about investing in green tech. And everything I've thrown his way, he's got data or access to data I do not have access to. And he's like, Wendy, these are red flags everywhere. We'll watch them, but not now. You will lose money. And I'm like, okay, well, I don't want to have that happen. So he is on the watch. He knows that, certain things I'm very interested in. So as things maybe settle down, hopefully in the near future, or as certain things pick up, because getting in on the ground floor of certain companies is the unicorn. It's very rare that you're going to make a ton of money off that one company that did it right, like the Googles or the Amazons. Yeah. And he says most people make it when that company's kind of halfway there. So we watch them grow. Then we jump in and ride the rest of the wave. Yeah. To use a surfing reference.
Yeah, thank you for wrapping that up with a surf analogy. Well, you guys all kind of hit on, just if I could chime back in on that, like Joel, I think you started saying that you want to buy something that's good for the long term, ethically, but also just sustainably valuable for the long term, and kind of what the promise of ESG is, which going back to definitions too, like ESG investing doesn't promise to necessarily change the entire world. Maybe the marketing language does, but really what it is, it's just the idea that more information is better than having less information when making a decision, especially for factors like the E, S, and G, which are basically meant to just be proxies themselves for what long-term value is. If you're a well-governed company, if you have good relationships with the community you operate in, if you use sustainable energy sources, you have buy-in with the public, like that's all just a proxy for long-term value in terms of dollars and cents. Like that's kind of the aim. If you're a company that is not sustainable in any of those three categories and their subcategories, you probably just won't be around in 25 years, or you won't be profitable in 15 years, whatever it is. But I hear you. It's harder once the personal decision happens. I'm sure I could find a more sustainable way to rinse my wetsuit every day, but all I know is a hose and fresh water. So
Okay, so I am going to ask a really quick question, because you brought up the idea of like 401ks, and when I've had 401ks and I've worked for corporations before, I never knew that you could even have these conversations about like where are my funds going. So I think are people able to do that? And why, if so, why aren't they told that? They're just kind of say, oh, put money in your 401k.
Yeah.
Good
That's
point.
like, you know,
Fine. Yeah, like you were saying, or Joel, you seemed like you were getting ready to be upset about something that I get upset about too, just financial illiteracy and lack of education, basic financial education. Yeah, taught to write a check and maybe also how to say yes to a credit card offer, but not totally sure what that means. I was definitely offered my undergrad student loans in a way that was less than savory, and luckily I knew more than nothing and read the fine print. But
credit
yeah,
cards.
I mean, I think that given the nature of the public conversation changing so much, and also people working remotely and trying to like gracefully divide life between personal and professional, all the rest, like we've become more encouraged to be open about how we feel about what's happening around us, the climate, burning, people suffering, all the rest. So I think a lot of, and this is just totally anecdotal stuff, but I think a lot of people are asking their manager to ask their manager, like, okay, so for example, there's a nonprofit based out of San Francisco called As You Sow, a really fantastic outfit that allows you to put in your fund in their fund screener, and it will come back and say, okay, you have the blank target date fund. Here's what's in it. Here's the score based on what we predict its effect based on the ESG criteria is, and kind of equips you to go back to your employer and be like, I don't know, this one, I don't really want a D- on my like retirement savings. I kind of like to do better. What are you guys thinking about? So I think it's pretty informal process at the moment, but I could see that being something that really takes hold in the next year or two. Employees kind of advocating for themselves in that sense. And
I hope so.
I don't know, that would be an exciting development. Yeah.
I think the financial literacy and, you know, on the consumer side, as far as knowing what our money is actually going towards, but it also, I think it goes both ways. The corporations have to be transparent to say, it's okay to ask questions.
Yeah.
It's okay for you to want to know where your money's going versus just saying, you have to say that, you have to say that, you need to save this, you need to plan for your future. So it's kind of, both sides have to start coming to the table, I think.
Yeah. I like the transparency. So Grant, thank you so much. We've hit our 30 minutes.
We have.
On just a last thing, what's the most exciting thing to you about ESG right now? Like what excites you the absolute most?
Oh, it
Big
excites
question.
me. It's got a lot of attention. Not all the attention is good. It's a lot of it's on this, again, going back to good, bad spectrum. It's the whole spectrum. But the point is there's attention on it, and things that get attention, just like things that get measured, get managed, things that get attention get sorted, I guess. Let's make that a saying now. So I have a lot of hope in that sense. I don't think it will be a seamless transition, but I think it will be it's a more promising than other developments of the last couple of decades, that's for sure. So
absolutely. I mean, change is hard. Change is hard, change is important. So I will close this out. Please follow Grant Harrison. Please follow GreenBiz. They're doing amazing things, and they are the ones changing the world. So thank you. Thank you for everything you're doing, and we will keep in touch soon. Talk together later.
Thanks, Grant.
Thank you, everybody. Appreciate it.
Take care, guys.